So you're thinking of buying your first home in the state of California, and you've probably heard, hey, you only need 3.5% down. And technically, that's true. But most buyers don't realize is there are many other costs involved in purchasing a home, let alone your first home in California. And if you're buying around a $450,000 home in California, and yes, you can, using an FHA loan here in the Central Valley, today I'm showing you the real numbers in 9 sections of this video, so stay tuned. And by the way, we're not here to sell you anything, buy anything. We're here to guide you in mastering the process of purchasing a home so you feel confident, informed, and comfortable with every part of that decision-making process. Our approach is diagnostic, it's not transactional. So for over 20 years, we've helped buyers understand their budget, their comfort zone, their long-term generational wealth strategies, especially in relocating here to the Central Valley. We have actually a reputation of talking you out of purchasing a potential disaster here in the Central Valley. So, number 1, section 1, FHA down payment. For a $450,000 home using an FHA loan, your minimum 3.5% down payment is approximately $15,750, but that's not the total amount you should prepare for. At today's approximate 6.5% interest rate, your estimated monthly cost, that's a principal and interest, about $27.45, taxes $470, insurance $125, your mortgage insurance FHA is about $300. So the estimated total is about $3,600 a month. Important interest rate disclosure though, and this is really important. You're going to get many ads online trying to lure buyers with 4.5% interest rates or 3.9 loans, but your actual interest rate is not secured until your estimated monthly cost, that's a principal and interest, about $27.45, taxes $470, insurance $125, your mortgage insurance FHA is about $300. So the estimated total is about $3,600 a month. And this is really important. You're going to get many ads online trying to lure buyers with 4.5% interest rates or 3.9 loans, but your actual interest rate is not secured until you have an accepted offer, your loan's underwritten, all 3. Section number 3. The additional cost is inspection costs. This is where buyers often get surprised. Typically, inspection costs, a home inspection will run you between $450 to $700, depending upon pool, termite inspection between $125 to $250, a 2-year roof about $500, and a sewer lateral inspection between $250 to $500, for a total of budgeting between $1,000 to $1,800. This reserve strategy, here's a smart move. We recommend buyers prepare between $5,000 to $10,000 reserve budget, if possible, for repairs when you move in or upgrades or items you see on the inspection that the seller won't correct, but you'll need to correct. Section 4, escrow cost. You'll also want to prepare for lender and escrow related costs. The potential costs are the following: appraisal about $850, lender fees, escrow fees, title fees, recording fees, prepaid taxes, and insurance. That's a lot of fees. Total estimated cost approximately 2 to 3% of the purchase price that you should budget. Number 5, the payment timing. One thing many buyers don't realize that your first mortgage payment typically is not immediate. Usually it's about 45 days after close of escrow. That gives many buyers time to transition and prepare financially. Merry Christmas. So if you are renting, anticipate paying an additional month's rent. Remember, the first mortgage payment is not 45 days out because you may have an overlap of your rental payment due and the timing and the close of escrow. So just something to think about, really important as you prepare to finally move in and close escrow. Number 6, wiring funds safely. When closing escrow, buyers usually prepare to wire funds, including their earnest money deposit, their closing costs, their down payment funds. Hey, please do not write a personal check. It will cause drastic delays and delays in escrow, and that's just going to be a nightmare. So wiring is the preferred mode of payment. And always verifies a disclosure that the escrow and title company, to avoid fraud, is legit, and you want to confirm that with your respective title company. Number 7, utilities. Utilities. Once escrow closes, you'll also want to arrange the PG&E, gas, water, public utilities, internet, phone services. Another topic, forwarding emails, rekeying locks, and all those transfers also occur during the close of escrow. And the escrow company, call them, they'll provide you a copy of your grant deed just to verify if the PG&E or utility company requires verification of new owner. Another often overlooked step, forwarding your email. We recommend a couple of options: the USPS forwarding, updating subscriptions and accounts. Just anticipate, sometimes takes 6 months to a year to finally transition that. We also highly recommend a 1-year home warranty, especially if the property has older systems, pools, small equipment, or appliances. And number 9, your value add. One of the biggest stressors after moving in is actually finding a trusted contractor. Yes, you'll have the home warranty, but that's one of our value adds. We help connect clients with over 20 years of vetted contractors, painters, floors, landscaping, HVAC guys, pool professionals, so you're not navigating everything alone after closing. So if you're even thinking about buying, call us before. Here's our contact information below. We'd love to help you understand the real costs. We'll help you understand the real costs to build your long-term generational wealth strategy. And quite frankly, avoid making those mistakes. So determine your comfort zone. We'll be glad to help you with doing that. There's our contact information below. And again, welcome to the Central Valley. God bless.